Okay, everybody, it's me, Gregory Mannarino. It is Friday, finally. Friday, June 24th, 2022. We are just about done with another week in this freak show. Let's talk about this freak show stock market real quick. As we have discussed right here in this blog, you and I, we clearly understand what is happening. There is a major effort to get cash back into the stock market. This is being perpetuated by actions via the European Central Bank emergency policy to stabilize the debt market, and with the Federal Reserve's unconventional policy to stabilize the debt market. And this includes the Federal Reserve's reverse repo program, which I covered yesterday. It seems to be working, okay? I put out an article in my newsletter about this last week. We talked about it here in this blog. I mean, right now, stock futures are higher. If you've noticed what has happened lately, 10-year yield has dropped precipitously. On the back of that, cash making its way right back into this stock market. It's a confidence game. It's a con job, okay? By keeping rates suppressed, as central banks have been doing since the last meltdown, creates an environment of risk, regardless of anything else. Risk meaning get cash into risk assets, the stock market. It's amazing, seriously, how the Federal Reserve Chairman Powell Yellowstone himself, for the last 2 days, has sat before a Congressional Finance Banking Committee, and no one has brought this up. No one has, it's all just a smokescreen praising that guy for the most part. He did catch some senators who did ask him a couple of questions that were disturbing to him. For example, why can't we just quit spending? He was asked that, Fed Chair Powell, and he just had no answer for it. The truth of the matter is we can't stop. It's the nature of the debt-based economic model. It demands that cash be pulled from the future. And as we are all aware of, you can see this for yourself. Don't take Greg Mannarino's word for this or anything that I say. The Federal Reserve's balance sheet is growing. It's not shrinking, okay? And that's another thing that was not brought up before the banking committee here. So look, you have no friends in government. I want you to realize that. I don't care who sits behind the Resolute desk or anything else. This is a war. It's a war against the people, more specifically the middle class. And it is accelerating. The Federal Reserve's actions, as I have covered here, everything they're doing and continue to do is massively inflationary. They know this. It's being done by design here, by keeping rates suppressed here, getting into the market, making it happen. The crisis mechanism, the Federal Reserve repo/reverse repo program, everything they're doing is inflationary. And no one wants to do a damn thing about it other than the jawboning by the Federal Reserve Chairman himself. Oh yeah, we're really serious about fighting inflation. Oh, is that why you're keeping the federal funds rate exponentially lower than the rate of inflation by their own numbers? That alone is inflationary, people. And you all know that. We haven't seen anything yet. We have been continually lied to. It's transitory. That wasn't true. Inflation is peaking. That wasn't true. If you notice, those narratives are gone now because they feel like they have lulled the people into some sense of hopelessness. And people will capitulate and just enter into a phase of, allowing things to happen to them, kind of like the boiling frog syndrome, a state of learned helplessness. This is a real thing. Look it up. Learned helplessness. And that's what they have done. This is such a scheme here. What they are doing, again, pushing cash back into the stock market via pushing rates, suppressing rates yet again, not allowing the market to determine fair value for anything. And the amount of cash that must be created to do what central banks are doing right now is epic. It's epic. This is not the average guy nor the average girl running out into the debt market and buying that debt. I got to own that debt. I got to own it. No, it's not at all. This is the action of central banks, and I don't think there's many people talking about it except for me and Chuck Barone. I want to give Chuck Barone a big shout out. He sees what's going on. If you haven't checked out Chuck Barone's channel, please go do that. He really has a good handle on this as well. Anyway, so with that said, let's back up a minute and look at a few other things. So yes, stock futures are higher right now despite, again, round after round after round after round of abysmal economic news. It's not stopping. We're back into that upside down situation where bad news, economic news, is good for the market. Okay, that's because, again, Fed is in here, ECB is in here, suppressing rates, creating an environment of risk, a risk-on environment, pushing stocks higher. You understand? Okay, on the back of that, we got cryptocurrencies, Bitcoin around 21,000, it's been stuck here for a while. We did dip kind of a lot lower than that recently, but we're back up to around 21,000. Gold this morning under a little pressure, silver under some more pressure, crude oil catching a bid this morning. This is where we stand with the market, okay? I can't imagine that anything that is coming down the pike is a surprise to any of you here that follow this blog. We have now, in my view, if you look at what's happening, entered into a new stage of market rigging that I think is eclipsing everything else. And I had said we were going to eventually see an environment like this from a long time ago, a new phase of this. And again, with the actions of the European Central Bank and the Federal Reserve, I mean, it's very hard to argue that that is not what's going on. We witnessed, people, you and I witnessed an uncontrolled spike in that 10-year yield, and it hit the stock market hard. I'm not talking about the slow burn that we've had since January. If you remember, if you recall, once we saw that spiking happen in that 10-year yield, we had several days of hard falls in the stock market, S&P 500 falling big over a series of days. And then the emergency policies came out and rates came down, stock market starts going up. I mean, it's a game that they're playing. We don't have a real market. The market could not possibly be more fake than it is today. And that's, I think, a big reason why it's been at least hard for me to navigate this market. It's just taken on a new phase of fakery that is literally beyond belief. And I think that most of you out here would have to agree. So in summary here, real quick, it looks like for now, that the Federal Reserve's actions in keeping rates suppressed in concert with the ECB getting into the market yet again, buying it all, has created another environment of risk on, cash going into the stock market. If you were to look over at the MMRI, Mannarino Market Risk Indicator, we have dropped back into the yellow zone. We were orange, okay, when all this stuff was going on and all that extreme volatility spiking in the 10-year yield, the MMRI turned orange, okay, next phase red. Now we're back yellow. I would, again, people, you do what you want, all right, but there is a link in the description of this video to the MMRI. Watch the MMRI and the market and how they work together. It's pretty clear to me that this is an indicator that does work. Again, it is not a crash indicator. It looks at risk in the market based on what's happening in the debt/credit markets. So just take advantage of that. It's free to everyone. There's no sign-ups. There's no nothing. Again, click on that link down here. Right at the top of the page, you have to scroll down just a tiny bit, and you can see the MMRI. Look at it. It is now in the yellow. All right. So with that said, people, that's where we stand this morning. I think you have a very good picture, perspective as to what is happening. And I really, really want to hear from you. Please comment. What do you see going on? Do you agree with my perspective? Do you have a totally different one? I want to hear it, no matter what it is. Look, there's always two sides to a trade, two sides to an equation. So let's come together on this. Let's get together. Again, please comment, please share the video, get it out there. And as usual, I will see all of you at the end of this day. Let's just see how it plays out. All right? Love you a lot.